Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Hey everyone, welcome back to Kitco News. I'm Jeremy Saffron, coming to you from the Rule Symposium here in beautiful Boca Raton, Florida, where it is warm outside. And speaking of heating up, silver is holding just under $37 an ounce, up 30% year to date. Gold still around $3,300 after setting that record first half of the season. But mining equities are still split. Some majors are finally catching up, others are lagging, and at the same time, M&A is heating up. Royalty firms are consolidating with the just news, I think, out of yesterday, Royal Gold buying Sandstorm in a $3.7 billion deal, creating a dominant precious metal revenue engine. And it's a clear signal here. Smart money is rotating deeper into real assets. But for investors, the question is, where is the value now? Not every mining stock is lagging. Good companies seem to be performing, and that's where we're going to get into it right now. Our next guest is Peter Grosskopf. He's a chairman of SCP Resource Finance, former CEO of Sprott. Of course, you've been in this for decades on the institutional side.
Thanks for having me.
Yeah. I want to get into this kind of macro setup. You and I were chatting just off camera about how interesting it's been. I mean, silver is up about 30%, gold up about 20% year to date. Miners maybe haven't really reflected some of those equity prices on at least their stock. Let's just talk about the macro setup with these gold prices and silver prices. Because you've been in this sector a very long time, we got tailwinds or headwinds? I mean, where are we in this cycle?
I think we have a pretty consistent tailwind. So what's happening out there in the world is having investors reassess, what do I need to hedge? There's a lot of uncertainty, there's a lot of mistrust developing in the system, and I think that all leads to increasing allocations towards gold and silver. I think this time it doesn't feel like a bubble. It feels like it's just slowly and consistently moving in, led by central banks actually, so it's healthy.
And it seems like debt too. I mean, people are starting to wake up to the fact that we're printing capital and maybe fiat isn't what it used to be, and gold taking over, it feels like this year, in terms of headlines at least.
It's a legitimate alternative currency or store of wealth that is not just a niche trade, and that's very different than the last sort of 4 or 5 cycles that I've seen anyway.
Yeah, let's talk a little bit about inflows. I mean, you know, we're seeing ETF inflows finally come into play, so it means that some of the generalist money, some of those retail investors are coming over to this side. Where are we? Are we in the early innings? I mean, have you been seeing some of that general capital come into the space?
I still think we're in, the middle innings. Yes, generalist capital is coming in, and a lot of them, by the way, don't just use ETFs. They have their own computers, and individual investors can do their own homework. So that has started to happen. The sector funds are still quite small compared to where they were 10 years ago, so that's probably representing some upside that they could still take in funds. Private equity firms, others are raising capital for the sector. I still think the generalist investor has a lot more room to go in the sector.
Right. It almost feels like, and I mean, we're at a unique conference where investors come and look at resource companies, but it still is kind of a specialized space. It almost feels like it's a specialist investor. So if they're not being so passive, just buying an ETF, I mean, where should people look for that value right now?
Well, I think both the majors are doing well, and earnings season coming, should see some pretty good results. I don't think they totally reflect the current spot price. I think many people still use spot price or model prices that are quite a bit lower than spot. But the juniors are where the most undervalued situations are, undiscovered assets that are trading well below replacement value, and I do think there'll be catalysts for those. So that's probably where the bigger upside lies.
Okay, we'll get into M&A in a minute because we, of course, heard about Sandstorm, and I think we can kind of shape this. But I got to ask you about if there's a gap between what companies think that they're worth and, what the market's willing to pay.
Yeah, I do. I think that companies know that their businesses would be very hard to replicate at current market prices, so they think their values are higher, and I think they're justified in thinking that.
When you look at the space in terms of institutional, because again, you're sitting at these boardrooms, how has that changed throughout the year with, as you mentioned, kind of having stable pricing on gold? We finally seem to have some good footing here.
I think investors are slowly getting more comfortable with the sector. There was a lack of institutional interest in this sector for probably 10 years. And so we're finally at the tail end of that, and we're cycling into the positive now.
Okay, well then, the different dynamics. I mean, with silver versus gold, we always talk about that kind of gold-silver ratio. It fell between 85 earlier this year. What does it look like? I mean, we've seen 8 straight months of central bank buying out of China. China alone has had 34 metric tons since November. Silver doesn't have that bid. And so we're looking at some of these silver companies. Where's the disconnect? What's driving it there?
Well, gold always leads, and silver is a much smaller market. So when you get generalist investors starting to rush into precious metals, which I don't think it's really happened yet, silver can get squeezed a lot quicker. And silver companies are harder to find. I think they justifiably can trade at higher valuations because there's not a lot of good primary silver producers.
Right.
So I think you just have this effect of squeezing the toothpaste tube where silver can shoot up a lot quicker than gold, and we're getting to that stage now.
Now, in all those years with Sprott, I mean, you've seen silver squeezes before. We've seen the narrative about it. What's different between this? Because we keep waiting for that 40, 50, and then it keeps getting smushed down. I mean, explain the market a little bit.
I think it's more healthy this time. I think the interest is broader based. People aren't in such a rush. I don't see a lot of calls out there for $50 and $75 silver. So it just feels a bit healthier. The fundamentals in silver, as you know, there's been undersupply for a long time. They've been eating through that storage. And I think that also feels healthier, that slowly but surely we're going to get a tight market in silver, and I think it's happening at a pace which people can handle.
Okay, well, then we got to talk about M&A, because if the evaluations on the silver side are small right now, are they just waiting to kind of boost these up before the majors come in and look? I mean, we saw that wave of consolidation. I don't know if it's like a strategic roll-up, if they're just buying the ounces in the ground, if they legitimately need it. What are your thoughts?
Both. I think that silver companies need to get bigger, and there's such a dearth of deposits that are really having the capability to develop into mines that you're going to see continued consolidations in the silver sector.
Yeah, is it just getting started, Peter? I mean, it almost feels like the mid-tiers are cleaning house at this point too, selling off some assets.
I think it is just getting started. I think we're just going to see consistent M&A across both gold and silver in the sector.
Okay, interesting. I got to ask you who you're watching for. I mean, is there any out there that you got some insight here and the audience craves it? So.
Yeah, I'm not allowed to mention any specifics, but if you take a look at good deposits that have long mine lives in good jurisdictions, and by that I mean generally Canada, US, Australia, there's not a lot of companies that have 10 to 20 year mine life potentials. Those deposits, if they have the social license and the government license, I think they are targets, all of them.
You mentioned Canada, you mentioned US tier 1 type plays. Just news this morning that Mali wants to take the gold that they have with Newmont right now and use it to operate the country a little bit. Let's talk about jurisdictional risk and what you look at as an investor to kind of navigate through those wins and to understand where your capital is best allocated.
Yeah, so in the gold sector, it is international, and there's many different jurisdictions that have great mines. But I think it's one thing to do the analysis on the mine, then you have to look at the country level and say, what specific risks am I taking in this country? A lot of those West African countries, you need to know how desperate they are for cash. Because if they're desperate, they'll resort to desperate measures. That said, both sides have leverage. The gold industry has a lot of leverage, employs a lot of people, and they need them. So, you have to do your homework when you go into those countries. Yeah.
Balance. And on the Mexico side, we talked about silver. Obviously, that's crucial. I mean, this presidency with Claudia Sheinbaum seems to be a little bit more responsive to the mining industry. But any jurisdictional risk you look at over there as well that you're concerned about?
Well, Mexico is this big question between environmental and political promises that were made versus the industry that we know they'd like to have. I think U.S.-Mexico negotiations also might play a factor there. I do expect that Mexico will come back to permitting and that we're going to get a resolution there over the next year or two.
And with strategic metals playing out in the White House, I mean, gold now, again, tailwind for the industry, but when do we get more boots on the ground? When do we actually open up mines?
Yeah, so far we've heard the sound bites, and we know the sound bites are because they're alarmed that they don't have enough supply chain. I think that sound bite will turn into real investment transactions over the next year, and they're going to have to find mines, not just sound bites about countries and, generalist statements like that.
Well said. And I guess that means, is there still room to get in as an investor? I mean, some investors say that they've missed the move or they're worried about it with gold prices being here and some of these evaluations being high. Still opportunity without chasing?
I think so. Yeah, I think especially with the developers, a lot of those companies are trading at 0.1 and 0.2 times their net asset values. So that's a big margin if things work out for them.
What do you look in at companies right now? I mean, you mentioned that in terms of the production side, is it cash flow? Are you talking permitting? Do you look at balance sheets or just ounces in the ground at this point?
Realistic prospect to develop net asset value. So net asset value would include mine life, would include production costs, would include the capital that it costs to get there. I know it's a complicated formula, but I don't think you can just look at one aspect. I think you have to say, is this a mine and how undervalued is it?
And there's a lot undervalued out there.
Yeah, there are.
And
yeah,
so
absolutely.
Those majors are in the boardroom looking at some of these plays actively.
Maybe all of them.
At these prices?
Yeah.
Yeah.
Well, nobody's using spot.
Yeah.
So that's where the other opportunity is for an investor. If you're willing to use spot prices, some of these valuations are so low it's almost ridiculous. Even with the majors price decks, they're seeing lots of bargains out there of the developers. It's more a question of what can they take on?
Yeah.
How much construction risk is there? What kind of dollars and people are involved in the construction.
Now, I know you sit on the board of Agnico too. Speaking of printing capital, I mean, they've been doing so well. They're getting their costs down so much. It seems like these companies that are printing cash are just coming out. I mean, we had Q1 really positive. Q2 is about to drop for a lot of these companies. We got a base of 3,300 gold. Is it not just going to get better from here?
I would think so. I think that all the majors are gushing cash from their principal projects now. The balance sheets have been in good shape already for a year. So the question will become, how much internal investment do they need? How much are they going to return to shareholders? It'll become a decision as to capital allocation.
Now, is that buybacks on the share side, or is it more dividend plays?
It could be both, or it could be acquisitions.
Right. Interesting. Okay. Well, that brings us, I mean, actually, I have a point here to talk about the past cycle, because GDXJ doubled 6 to 12 months after gold made its breakout. And I'm wondering if we could see that happen again in this environment.
Yeah, I mean, the GDX heavyweights are up a lot.
Yeah.
But I would say that at 3,300 spot, you could still have a pretty good shot at a double, especially because the junior end of the index has even more price appreciation left, I think.
That's so crazy. I mean, I wonder if evaluations are still so low to pencil deals. I mean, is it a buyer's market out there? If you're cashed up and you're a major like Agnico, it seems like it's a buyer's market.
I think the competition for assets is increasing.
Okay.
Yeah, I think that there's a lot of buyers out there.
Interesting. I believe you when you say that. I can tell that you have some insight into this. Okay, well, last question. I got to talk to you. You know, best value today when you're kind of looking at these investments. Are silver juniors? Are you talking gold mid-tiers? Is it the developers we mentioned? Royalty companies?
Well, I mean, royalty companies have a great model. The question is, are they undervalued? They are in a consolidation phase as well, obviously. I would say I do my homework in each and every situation. I have a pretty broad and heavily, for my personal funds, I have a high weighting to precious metals. So I pick and choose where I see the best value. And I do have some silver, I do have some gold, do have some royalties.
Yeah, it's interesting. We had Randy on the show, Smallwood, and we were talking to Wheaton, and they have such low GA costs in comparison into this model, obviously with the streamers, that you almost wonder, that must be the value here.
Well, in their case, it's a question of how much greater to their NAV do they trade, because there's clearly at NAV, they can make their shareholders boatloads of money and they have huge margins. So they tend to trade at big premiums to NAV because of that. So the question is, who's undervalued in the royalty space?
I like it. We'll ask the audience. Okay, last, before we let you out of here, just kind of a wrap-up segment. You can answer quick here, Peter, but I got to ask you, price of gold 2025, what are your thoughts? What's your outlook for the gold sector?
Well, I like what Grant Williams said in his talk earlier today. Central banks are buying. They're going to underpin the market. You don't have to go too much further to realize that investors are going to keep allocating more to gold. So it will go higher. when and how much is harder to tell. But over a few years here, you could easily see gold breaching 4,000 and higher.
Yeah, especially with the big, beautiful bill that Grant was alluding to there.
Lots of money that needs to get printed.
What's your favorite, I don't know if you can answer this, but what is your favorite underlooked miner right now?
I can't answer.
Yeah, I didn't think you could. But I had to try for the audience. Are we going to see more M&A this year? Or are we going to wait for 2026?
No question in my mind that the majors are lining up now to do M&A. It is a competitive area. There aren't that many buildable targets out there, and I think the parade of M&A announcements is going to continue. I'm not saying it's going to blow the top off. Yeah. I just think it'll be slow and steady accumulation of juniors.
Makes sense. And on the strategic metals, I mean, we mentioned it, but what we haven't been talking about is lithium, uranium, a lot of these other commodities out there, or metals. Is it a gold and silver market this year? Are you looking at some of these other producers?
Oh, we're definitely looking at other specialty minerals, and each of them have smaller market, tends to cycle a lot more. Of course, it's more based on industrial demand, so you have to do your homework. But they get very undervalued at points in time. So we are looking at specialty minerals all the time. Lithium's getting pretty low now, and it's hard to find a lithium mine that can make money at today's prices.
So just cyclical. It was a trend, and then people sold. I'm assuming sold a bit of profit, but it's the long-term base thesis is there for all of it.
I think you have to keep in mind it's a commodity, except for gold, which is, in my opinion, an alternative currency. The rest of them are going to cycle. You need to buy at the lows.
All right, Peter Grosskopf, chairman of SCP Resource Finance and former CEO of Sprott. Obviously, tons of experience here. I appreciate your time. Thanks again, my friend.
Thank you.
All right, I'm Jeremy Saffron for all of us here at Kitco News. Thank you for watching. And we're at the Rule Symposium here in Boca Raton, Florida. We're going to have some great guests coming up all week long, so stay tuned, and we'll see you next time.
Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.